Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Great to have you back on today. Thank you.
Happy to be here.
Well, let's start with Wall Street, where it's earnings season now for the first quarter. We've seen strong earnings for some airlines like Delta, also American, whose stock was up more than 10% on Wednesday. In financials, though, JP Morgan, the biggest bank in America, saw profits down 42% from a year earlier. Its stock down more than 3%. What's the story in the global markets?
Okay, well, the U.S. market yesterday, Dow rose by 1.01%, S&P by 1.12%, and NASDAQ by 2.03%. It broke a three-day losing streak, and as you mentioned, the positive earnings report seems to be outweighing the worries that we had for the last couple of days. The 8.5 Consumer Price Index inflation rate, 11.2% Producers Price Index inflation rate, and the warning by the Fed that it will likely take so-called big steps, increase of 0.5 percentage points in the interest rate during their next meeting. So the market seems to be turning at least a little bit optimistic now. The growth in the stock market was due mainly because of the pandemic recovery. The summer is coming up, and people are expecting that the travel stocks, airline stocks, will do very well because airlines, people are going to use their vacations to satisfy their pent-up demand for traveling. Now, JP Morgan, the stock was down 3.2%, and in a sense, it was a special case last first quarter last year. JP Morgan had some extraordinarily profits that weren't repeated this year, so their profits were down by 42%. But their numbers were actually fairly close to expectations. The revenues were a bit higher than expected. Profits were slightly less than expected, but it was around expectations. So what caused the decline in the JP Morgan stock prices? Well, it seems that the investors are worried about the $524 million hit that JP Morgan took from Russia, and the JP Morgan seems to be expecting more hits from the Russian invasion and sanctions as well. Morgan increased loss provision by $902 million to $1.46 billion, and it admitted that it was vulnerable to Russian sanctions and uncertainties. So that seems to have caused the fall in the Morgan stocks. Previously, we had some decline in German bank stocks as well, Commerzbank being one of them. But it's questionable whether it will affect other banks. The futures for U.S. markets for Thursday is up slightly, and most investors seem, at least for now, optimistic about the earnings of other banks. For Europe, they just started trading, and it's somewhat mixed. DAX is a bit down, FTSE is a bit down, but CAC is holding level. Asia, some markets are still trading, but it's mostly over. Nikkei rose by 1.2%. Shanghai also by 1.2%. Hang Seng rose by 0.56%. So at least for Asia, they're taking more optimistic line from the U.S. But for Europe, whether they'll continue the growth pattern that we've seen in U.S. and Asia, it doesn't seem likely at this point.
Well, Korean stocks were a little shaky today, a lot for investors to digest, including the BOK's interest rate hike, which we can talk about a little bit more in a minute. The KOSPI closing about flat, the KOSDAQ up a little bit, but among the biggest names, it was a real mix. Tell us about the domestic market, Professor.
Okay, well, the Korea Exchange had a very interesting report coming out. It looked at the stock price changes for the listed firms in KOSPI and KOSDAQ between March 12th and April 12th, and it turned out that a number of firms not only had the highest recorded numbers in the last 52 weeks, but also a lot of firms had 52-week lows as well, lowest stock prices that they've seen in a year. And surprisingly, some firms had, within the month between March 12th and April 12th, they had the highest amount for the last year as well as the lowest amount for the last year, defined as the last 52 weeks. So going into this in more concrete detail, 75 KOSPI listed firms and 164 KOSDAQ listed firms recorded 52-week lows during the period between March 12th and April 12th. 32 KOSPI firms with market value above 1 trillion won recorded 52-week lows during that month. And then 2 KOSPI firms and 12 KOSDAQ firms within that month had both 52-week highs and 52-week lows. And then 61 KOSPI firms, 97 KOSDAQ firms had 52-week highs. So this just shows that right now Korean stock market is extremely volatile, and it's really getting hard to predict what the firms will be, what the price of these stocks will be like. For today, KOSPI rose by 0.01%. It ended at 2,716.66. Individuals and institutions bought, foreigners sold. KOSDAQ fell by 0.47%, ended today at 357.33. Individuals bought, institutions and foreigners sold. And KOSPI for year to date is down 9.1%. KOSDAQ year to date, it's down 10.6%.
Well, now it's appearing more likely that the Federal Reserve will be raising interest rates next month more aggressively by 50 basis points. And ahead of that, the Bank of Korea today raised rates by 25 basis points. It seems we can expect at least a couple more moves like this later this year. Professor, what do you make of the BOK's decision?
Well, the popular interpretation is that this was because of the Korea's last consumer price index figures, which showed that the Korean inflation over the last 12 months was 4.1%. This is the highest since December 2011. And inflationary expectation is also going up to 2.9%. This is the highest since April of 2014. But personally, I do not think inflation is the major reason, and that's because most of the inflation is coming from foreign sources that's really out of control for Korean monetary policy and interest rates. And Korea's economy is fundamentally right now weaker than American or European economies. If you compare inflation rates between these countries, Korea, as I mentioned, 4.1%, but U.S. is 8.5%, Eurozone is 7.5%, and United Kingdom is 7%. So there's other reasons why Korea needed to increase the interest rates. That I think the most important reason is household debt. With the rise in interest rates, Korea has been successful in slowing down the household debt along with the regulations that the Financial Supervisory Service had introduced. But after the presidential elections, the household debt seems to be shaky again, starting to show some rise, some signs that it would be rising. And then second important reason is exchange rate. Korea's won is depreciating slowly but steadily, and a lot of people feel that it's gone to perhaps won right now is too weak. And then third reason, we don't want inflationary expectations to go even higher than it is right now at 2.9%. And also, fourth reason, housing prices, because the new president is expected to deregulate a lot of the housing-related regulations. There are some signs that housing prices are also going to rise, and they want to try to at least limit that by raising the interest rates. The United States Fed is expected to raise the rates about 6 times, and some of those times it's expected to raise the rates by 0.5 percentage points rather than the usual 0.25 percentage points. But given the state of Korea's economy right now, Korea cannot handle that much of an interest rate increase. That means the Bank of Korea will have to pick and choose when they'll follow the United States in raising the rates, when they will not. And this is going to be a very tricky policy for the Bank of Korea. And I think the raising the rates at 0.25% right now is the first step in them trying to carry out that tricky path.
Right, it's a lot of things in flux right now. Professor, appreciate you helping us get a handle on it. Thank you as always for making time for us today.
Thank you.